The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. A bit of a mixed bag on Monday's market trade. We saw Kansas City, Minneapolis wheat higher with a little bit of intermarket spreading and corn of beans. Cattle had a good day led by feeder cattle. We're going to talk about the entire trade here today as we welcome in our good friend John Heinberg with Total Farm Marketing joining us here on today's program. John, always great to catch up with you. Hope you had a good weekend. And we come back into the week. It is WASDE week. They may report out on Friday. So I know that's an item on traders' minds. Also, I feel like planting progress is going to be a big thing to watch here later on Monday afternoon into Tuesday's trade. It just felt like a fairly quiet day on Monday with a few news items sprinkled here and there, but that grain and oilseed trade just didn't do a lot on Monday.
Yeah, not so much today. I mean, a lot of spread trading. You saw big activity between the old and new crop spreads, and there's some fundamental reasons why that's happening here in this window. And, then the wheat market, like you touched on, a little bit of spread trading. Just kind of felt like that the spring wheat as well as the KC wheat wanted to pull away from Chicago in that regard. Didn't like the price action that Chicago contract at all, but we'll have to see if things can kind of settle back down again. Obviously, we had such a big rally last week to close the week in wheat. Some pullback on some of those spreads, some of those plays is not surprising to start the week, especially with the USDA report here at the end of the week being the new goalpost setter here for the next handful of weeks.
Well, I think about looking at wheat specifically, obviously the weather concerns in the central and southern plains, and then the delayed start to spring wheat planting in the northern plains. You throw that together along with all the Black Sea issues, the Russia issues that we've been talking about, we've been hearing about, and the escalation of those tensions more so, and then the grain deal. Will it get renewed on the 18th? It seems like the prevailing thought is it will not. So it feels like all of that is kind of feeding into that wheat trade here last week and then continuing a little bit on Monday's action.
Yeah, we continue to see the funds move into a short position in the wheat market, at least as of last Tuesday when they reported on the commitment of traders. So those factors all got come into play. Now we got this short cover and rally. Maybe that was triggered by some of the actions in the Ukraine or some rising tension escalations. I still think that crop tour of Oklahoma showing how poor that crop is in that region definitely comes into play. I think that's what's really boosting the KC. Now we'll see the Kansas tour coming up here in about a week. See what those numbers are. Don't forget to throw one other little wrinkle that's a to watch item. Canadian prairies are extremely dry right now. They got a lot of fire issues in some of those regions. Maybe some moisture moving in, but again, as they're getting into the planting window, things are looking dry. So maybe the North American wheat crop in general is just not going to be in good shape, and the market may be anticipating that, in general compared to the global price situation. But that's what kind of triggered the funds to get out of those shorts last week. Again, today was relatively choppy, but, they had a pretty large position there. That was what moved over into the corn market and gave us that strong price action off of those lows last week as well. So we'll have to see how the next few days goes. I expect this to stay pretty choppy as we move closer to that USDA report here at the end of the week.
Well, you mentioned funds short in wheat, and they're also short in corn here too. And an interesting thought I've had with this corn market, and we can touch on this a little bit. Obviously, saw some of that intermarket spread there with old crop trading unchanged on the day, new crop pushing a bit lower. And one has to wonder, is that a sign of, okay, farmers busy in the fields planting, expected good planting progress kind of weighing on new crop, while in turn old crop getting a little bit of a boost from farmers not selling, busy, don't have time to sell. So I'm wondering if that maybe contributed to some of that action there in the corn market on the day as well. And then obviously the fund aspect is wrapped up in there too, John.
For that old crop supply, we got to go right to the national corn basis, which actually is last week calculated about 36 cents a bushel over the July contract as we made that roll. So that's a reflection of a couple things. Number one, the tighter supply that's out there. USDA will touch on that obviously on Friday. Number two, like you said, farmers are cranking last week, so they weren't moving corn bushels. End users are still looking for corn. The ethanol plants are bidding up. I had one client telling me today he was seeing some bids along the river, like they wanted to get some barges moving. So there's some opportunities on the cash market here. I've been telling guys to be a little bit sharp about that. Just, don't fall asleep. Market gives you a good basis. We get a good nice little rally here. Hopefully we can get back to the $6 handle. And it's probably a great window to get some more corn moved if you haven't, even though I know things are hectic in the fields at this time frame. That's what pulled that July contract, and obviously no deliveries continue against May. Keeps those old crop supplies moving. And putting pressure on that back end. So, that's the biggest thing right now for me is where does this cash market want to go to? Now, we are still very concerned about demand. Weekly export inspections at 960,000 metric tons today. It was below what the market thought. We just couldn't put 2 good weeks in a row. Been nice to see another million plus number like we saw last week, but it just isn't there. So the big question mark on the old crop supply is what does the USDA do with demand on Friday, and do they tighten up the picture a lot? Or do they add a bunch of bushels to the carryover and cut some more demand out of the pile?
Well, and I feel like that report coming up on Friday, let's just get into that, John. Always a volatile report, always a market mover. And to me, it feels like, planting pace is on par, if not ahead of where it should be in many cases. So I don't see that having any sort of impact. And then obviously we're using these new numbers for setting the goalpost, as you said earlier. I just feel like this report shaping up to be just as or even more volatile than it has been in recent years, John.
It is, again, just because the way the market wants to trade, where the money is sitting right now. You mentioned money flow. I mean, the funds dropped over 100,000 corn contracts to the short side, last week before we started buying on Wednesday. That's when the commitment of traders was put together on Tuesday afternoon, reported on Friday. So that was one of the strongest weeks in history in terms of actual net selling of positions in the corn market. So again, they're thinking on the defensive side. We'll see what those numbers come out here for the new crop supply. Now today, planting progress, 48, 49%, somewhere in that window. 45-year average is around 42. So we'll get those numbers here in about an hour. So we'll see where that comes in. I expect that to be probably pretty true just from talking to people. A lot of guys got stuff done over the last week here. So again, coming back to it, what's the USDA put out there for those numbers? Right now, it doesn't look like we have a whole lot of hiccups on the front end, except maybe for the north. In terms of getting this crop in the ground, put those baseline numbers into the balance sheet. Things look pretty heavy, so it just sets itself up for a great scenario like we saw in the market today, which is what we call bull spreading, when that old crop price can pull out over top the new as we got a possible tighter supply on the front end and big supplies coming down the pipeline. So again, that's kind of what's given this market the formation that we're seeing right now for both corn and beans.
Well, with beans as well, we saw some of that spread action, as you alluded to. Interesting thing here that I've noticed the last couple of sessions is palm oil surging. Was it, I think, up 5% on Friday and then up in almost another 5% on Monday. And it feels like that this soy complex has been looking towards those world veg oil prices markets for some sort of direction here. What's your take on that situation, John?
Again, it all comes down to supply demand situation. What's going on in terms of global palm oil supplies, and it's still the most widely used edible oil globally. Obviously, throw into the biodiesel component of it or the renewable fuels component of it. How's that come into play here in the United States? Now, right now, you had two different charts working two opposite directions of each other today. You got a little bit of buying in the soybean meal, selling pressure in that soybean oil. We're poking at some pretty low levels here. We'll have to see if that can hold. But again, it just kind of comes down to that supply demand factor and where we're at in terms of the supply side of it. And we got a lot of crush plants coming online, but those are still coming online. So we'll have to see what happens over the next handful of months if those get up and running. It was a little disappointing to watch that action in the soybean oil market today, especially with the strong move in crude. So that definitely told you maybe we were seeing some spread trading going on there against the palm oil versus the soybean oil in terms of the supply that's in this market.
Well, and you mentioned crude as well. And just a quick tidbit there, we had that big break, and then crude has steadily worked its way back up around that $73, $75 handle. Just seems like no matter what we do, what kind of big move we have in crude, we just kind of gravitate right back towards that level, John.
It kind of seems like at the equilibrium point. We get to the low 70s. We saw the big snap around last week when the prices broke into the low 60 window. It just feels like it's a little undervalued. The market's comfortable there. That's when OPEC made their cut on production when we got to the below the 70 handle. Are we buying for the strategic reserve at that point too? So, it just feels like there's at least a little bit of a floor built under this crude oil market right now. But again, at the same time, we're still concerned about the demand, the global recession, global economy, what's going on with China in terms of global demand keeps us kind of lidded. So right now it feels like we got a pretty range bound market, right? And we're smack in the middle of that range here in the 70 to 75 handle.
And rumors were we were doing some buying in the Strategic Petroleum Reserve potentially when we got down into the upper 60s. So we'll have to see if that's the case. And of course, continue watching those outside markets. We're having a conversation today with John Heinberg of Total Farm Marketing. John, let's go over to livestock trade. I want to start with hogs, just because this hog market, curious hog market here. I thought we'd found some support, and then obviously we gave a lot of that back the end of last week, and then continued to leak a bit lower on Monday. It felt to me like some of that fund money and technical moves by the funds really push the market lower again. I wonder your thoughts. Do you agree with that, or are you watching something else in this hog market right now?
It still just comes down to the premium of the market. Again, we look at June versus the cash index. We're getting close to the end of the contract life here for May in the next week or so. So we'll have to see how that kind of plays out. We're starting to get some turn in the fundamentals. Cash index is now up to 74. Retail carcasses at 83. So we're getting some actual movement there that we haven't seen for quite a long time. So maybe it's our window to move it to a spring high. But the problem is we're still looking at about a $10 premium of the futures over the cash market here. And that's basically going to keep things weighing. If we get May off the books and we're still at that area, June needs to come down. The biggest problem we're still seeing is heavy slaughter. Last week's slaughter was 2.5% higher than the week before. 60 to 70,000 more head of hogs went through the plants. Again, that just builds up supply. Now we've had 2 great weeks of export sales and shipments. Hopefully that can continue as the world seems to be jumping on the cheaper U.S. pork at this time frame. So there are some indicators that maybe this market wants to come back higher. But like you said, we had a technical breakdown. It started on Thursday, washed out on Friday. A little bit of follow through here today to new lows on that June contract. Hopefully we can find some footing again. Then it seems like a broken record. Been saying this for almost 2 months that a low can get put back in here. But at least now we're starting to get a little bit of fundamental support. And that's the one piece that has been missing all along here in this hog market, is watching the cash market, cash index starting to trend higher, as well as a little bit firmness in that retail market.
Well, we'll have to watch and see if this support that you mentioned has been missing can finally hold. On the cattle side, cattle feeders leading the way higher on the futures trade on Monday. A decent start to the week there. I wonder with this cattle market, we're seeing meat packers, wondering how much they're going to pull through, trying to manage those margins and that battle with producers. What's your take in this cattle market here right now? I know things have kind of started to chop sideways the last couple of weeks, John.
That feels like the general trend right at this moment is sideways trade. Obviously we're a little bit negative on the charts. We rolled over again last week. We got a couple different toppy signals on this front end. So maybe our spring cash high is here, at least at this time frame. But packer margins are still very strong. We're still seeing choice carcasses trading well over the $300 handle. So with that, and even the cash market down a little bit, is still trading around 172. So unlike the hog market, we still got that discount of the futures to the cash. I think that keeps this market supported. But at the same time, I don't know if it really wants to take off again just because of the concerns regarding economy, recession. Have we taken this thing too far? The length in the funds are all things I'm kind of watching here. So I think we're in a market now that just might want to go nowhere for a bit. We've maybe built the top of the range. Now we're at the bottom of the range, and sideways might be our best fashion until we get some type of clarity one way or another in terms of does cash kick back in and lift us higher, or do we actually see some rollover in terms of that cash price even more so? But given the supplies, the fundamentals, I don't sense that at this time frame. So I think we got a cattle market that, despite maybe a strong move in feeders, if the corn market were to take a tough number at the end of the week and cause it to break through to new lows and feeders take off, that the cattle market might be more of a move into a sideways play here, at least until we get some more clarification later on in the spring and summer.
Well, John, one thought here, watching this cattle market, some of the worries about the economy and demand, at the retail meat counter, et cetera, and just looking at this market that is starting to chop a little bit, quieting a little bit. Is this a good opportunity for producers to look at their marketing here in cattle if they haven't really done so here this first part of the year? Should they be looking at getting hedges in place, et cetera, et cetera? I mean, it feels to me like with a quiet time, this is a good time to maybe assess or reassess your marketing plan in cattle.
Yeah, momentum has definitely slowed. We had such a strong move to the upside over the last handful of weeks. And again, we've kind of rolled over a little bit on the charts. This is an opportunity where you want to probably, if you still feel like there's upside there, go to the put strategies underneath the market. Or if you move some cattle because volatility is slowing down a little bit, some of the calls over top just to keep some paper in have gotten a little bit more affordable. But, we still got great prices. And overall, to keep some type of floor in and protect what we have for gains, you need to take a look at. Because, again, who knows what's going to happen on the macroeconomic side. That can change overnight. Which could break this market down. The only thing, again, that's still concerning, the funds are still holding a very large position in the cattle market. When they want to change direction, regardless of the fundamentals, they will. Okay. And then usually, as we hear, producers are sitting back going, why are we going down? Why are we going down? Well, it's money flow. And if the money wants to step out of a long position because they think they've made enough and it's gotten boring and they're not making returns, they'll quickly turn that thing the other way around and head back down. So again, be on the defensive, I would say, at least until proven otherwise, but I wouldn't use strategies that lock you in terms of your floor, but keep that flexibility available to the upside, whether using puts and keeping the cattle available or go ahead and locking in the cattle into a good cash market and then maybe working some call strategies over top.
Great stuff. How about that dairy market trade as we kick off the week? Any thoughts to share there, John?
Again, a market that just still wants something to go the right direction. Maybe we put a little bit of a low in last week again in these front end contracts, but it just feels like we stay on a slippery slope overall. Production stays up. Now it looks like weather across the Midwest is going to get a little bit more friendly, in terms of temperatures, in terms of moisture, things of that nature. It's just still a little bit of a scary market here, especially at the end of the school year here too, and some of the fluid milk demand falling off the table as well. Hopefully we can find a bottom in this thing, but again, we're still on a little bit of a slippery slope. But watching that little turn we put in here a handful of days ago, if that breaks and this market does have another leg down.
Well, John, great thoughts as always. Before we wrap it up today, anything else you want to mention or reiterate for folks?
Again, it's a busy time. I know things are going. You're pushing in the fields, putting in long hours. Don't forget about that marketing arm, reaching out and talking to people, just keeping your targets out there. Right now, if you've got some old crop corn, again, I still think we want to move some bushels here. If we continue to run up and into those lower levels, take advantage of that strong cash market. Just go set some targets and let those targets go to work. So that way, at least you're making something done on the marketing side while you're busy getting this new crop in. Don't forget about next year. Okay. Even though typically we don't put highs in January, if this market continue to feel like we've got growing supplies and USDA gives us some big numbers, we still got more room to go down first before we can come back higher.
John, if folks need some advice with their marketing plan, I know they can get that from you and the team there at Total Farm Marketing. What is the best way to reach you?
Love to talk to them anytime. Give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. Again, don't forget that website of ours, totalfarmmarketing.com. Again, a lot of great information for producers. Feel free to pick up the phone. I know times are busy. Stay safe out there. But again, if you got questions, feel free to reach out.
Well, with that, we appreciate the time. John Heinberg with Total Farm Marketing. Thanks for joining us today. Have a great week, and we'll talk to you next week.
Sounds good. Have a great week.
That's going to do it for the show today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.